Front and center this hour, a new Fed chair is named. Markets are reacting today to Kevin Warsh's nomination. We'll trade that and, of course, the Apple aftermath along with the rest of tech today. Joining me for the hour, Stephanie Link, Jim Leventhal, Rob Seach, and Josh Brown. Let's go to the markets where we are red across the board today with the Russell 2000 because rates, watching that obviously and what's happening in some other areas of the market. The Russell's given back more than anything else, but we do have declines across the board. All right, so Warsh is the nominee. Everybody knows that by now. Mm-hmm. The dollar's move today is interesting. Silver, let's just look at silver. Silver is getting obliterated. Gold is down too, but these have been, show now the longer view, so you can see the amazing, unsustainable, some have suggested, run-ups in all of this. Mm-hmm. Why is this happening today? Well, there is a view that Fed independence is safe with Mr. Warsh. And by the way, BlackRock's Rick Reeder would have delivered, I think, the same sort of feeling in the markets. Of Mr. Reeder, he told me about not being chosen, quote, "This has been an incredible honor for me. I congratulate Kevin on his nomination and think he will serve the institution and our nation very well." I don't want to have a policy conversation. I want to have a market conversation. Gold and silver. A lot of people have been piling in there. Yeah. A lot of retail has been propelling silver's move. It's almost been meme-ish. Is this over?
It may be on pause, Scott, but you're exactly right to use the word meme-ish. Now, just a little backdrop. We've talked a lot on the show about how retail is no longer the dumb money. In fact, it's been very smart. What it's also been is very fast. And we see that in the options market, where silver in particular over the last few weeks, the open option contracts have absolutely skyrocketed. And that's in large part, why it propelled the heights to which silver went. Now, let me be clear. The direction of silver, both to the upside and today to the downside, is definable by market forces, namely concerns about the dollar, concerns about the Fed independence, which may be put at least a little bit to rest today with the selection of Kevin Warsh. But the degree to which silver shot up and which it's come down is likely the speed with which retail players are accessing silver via the options market. And I'm telling you, the volume there has shot through the roof.
I mean, escalator up, elevator down. That's what they say, right?
Absolutely.
I wonder if we're going to end up, Rob, seeing something similar to that.
Well, you certainly saw a mania phase reached earlier this week, maybe even yesterday, when trading on silver options surpassed trading on NASDAQ options. I don't know that we've ever seen that in the past, right? So when you have activity like that, it's an indicator of mania. I do think, you know, when you look at assets that move in a parabolic way like that, you're going to see exactly what you talked about. But you need a catalyst. This certainly
maybe Warsh is the catalyst.
I think it is.
Independence
I think
and
it
a
is.
Stamp on that appears to be a catalyst for something.
It's not just that, though. It's that this is a guy that had hawkish policy during his tenure from 06 to 11. The great news is he's a responsible adult in the room. He lived through the housing bubble and then ultimately the financial crisis that followed. He's shown a recent willingness to cut rates, I think, and obviously enough to get President Trump to support him. But markets at least feel today that he's going to revert to his hard money roots. And if he does, I think that that's going to create some episodic challenges.
No, it's like fool me once, shame on you, fool me twice, shame on me. I may have gotten the inflation picture wrong multiple times before, and I'm not going to be burned by the same thing in the next go-round now that I'm in the biggest chair in the room, not, you know, one of the second tiers as a Fed governor. But
you could argue that he was, you know, that the change was positioning for this role, and that there could be a reversion, which I think broadly, long term, is healthy for the markets to have that independence.
But again, like, you know, for our viewers and the broader audience that's been piling into and playing the momentum, right? We've seen so much of a momentum game on Wall Street at times, whether it's meme stuff or like this, what's happening. You never see this kind of rush into silver or gold. Real quick.
It has sucked even assets away from crypto. I am telling you that
crypto's under pressure. It sucked assets kind of away from a lot of different things. And
yes.
Is this trade now done for the foreseeable future, Steph?
Maybe it does take a pause, like Jimmy was just saying, Scott, but I'm just happy to get the news out there and get the unknown to be known.
You ain't lying.
What?
We all are.
Right? I know, but the point being is that unknown and that hostility between Trump and Powell, actually now that might just go away with Warsh, right? And so if you have a nice, disciplined relationship, things calm down just a little bit. Now, in terms of gold and silver, I actually think you've seen central bankers, changing their asset allocation over the last couple of years, selling some U.S. treasuries and going into other asset classes like gold and silver. And then it just got exacerbated by retail following that momentum. I don't think you're going to see central bankers all of a sudden sell gold, sell silver. The difference between gold and silver, though, silver, half of it is an industrial commodity. And we just got some great manufacturing data, durable goods data, factory orders data, and AI. It's all supportive of using more silver, more copper, and a lesser degree gold. So I think there's a reason to have exposure because of all the things I just mentioned. But I think the big catalyst was the central banker starting to move assets away, and maybe they just stopped that, and so therefore you see the underlying commodities take a pause.
All right, Josh, your view of all of this. Again, we don't want to debate the kind of policy we're going to have really under Mr. Warsh if confirmed in the Senate, but nonetheless, what these specific trades, which I gather you probably have been asked about a lot over the last many weeks as we watch these things go parabolic.
Yeah, look, there's no need to debate policy because that has nothing to do with what's happening with prices today. It's just an excuse. Like, we could have, if gold and silver had done what they're doing today and there wasn't the announcement of Kevin Warsh, we would have found something else to decide is the explanation. The reality is it's not that complex of a situation. I was with Tom Lee last night, and he had mentioned that on Wall Street Bets, the numbers 1 and 2 most talked about tickers, don't fall out of your chair when I tell you this, were SLV and GLD. So gold and silver, yes, central banks have been accumulating by the ton for years now. That's the primary trend. And then the trend got noticed by the momentum players and the retail, and it got sucked into the casino.
Sure, just what we said.
And it got sucked into the algos. And that's the story. And whatever the trigger is almost besides the point. I think what got revealed today is that there was a ton of unsophisticated money, uncommitted money, and a lot of leverage. And boom, this is how it works. And I'll tell you, gold down 7% today, silver down 17%. It's remarkable in more than one way. Gold had its best ever one-day return 2 days ago on Wednesday. It was up 6.5%. That's the best ever back to the financial crisis. And today, down 7% will be the worst one-day return since April of 2013. Having that happen back-to-back, there's nothing fundamental about it. This is all leverage, and I think it's very healthy, quite frankly. So if you're a gold bull, silver bull, doesn't mean it's over. What it does mean is a lot of dumb money got flushed out, and now prices can reset, and you can bet on that longer-term uptrend if you want to.
So Tom DeMark would agree with Josh on that, by the way. One of the most famous technical strategists. He thinks the upside is pretty significant. I forget the target, but it is.
Sure, but the rate of the upside has been...
That's right, the rate.
Insanity.
That's right.
And that's, I think, what Josh is talking about, and also why the big burst up and the big burst down ends up happening, because the insanity,
runs its course.